New Holdings, the digital banking behemoth, just dropped an earnings report that absolutely lit up the market. But behind those incredible headlines, there's a much more interesting story brewing in the data. So we're going to dive into this technical analysis report and play detective, see what the numbers are really trying to tell us about what's coming next.
And here it is. This is the number that grabbed all the headlines. A massive 91.37% increase in net income. I mean, wow. That's the kind of number that makes investors snap to attention. This is our inciting incident, the big bang that kicks off this whole investigation. And that, right there, is the central mystery. Because when a company puts up numbers this good, you'd think the stock would just blast off into orbit, right? Well, it's almost never that simple. The news gives us the motive, but the technical charts, that's where we find the clues. So what do they predict for new stock? Let's find out. Okay, so every good investigation has to start at the scene of the crime. Or, in this case, the scene of the massive triumph. Let's just quickly go over the fundamental news that got this whole ball rolling. So let's zoom in on what the report's introduction tells us. The key numbers are just fantastic. Net income of $783 million and revenue hitting $4.17 billion. That's a 41.8% jump from this time last year. And get this, they did it by growing their customer base to over 113 million people. So yeah, the fundamental story here is rock solid. All right, with the basic facts down, the first thing we detectives have to do is zoom way out. Before we start dusting for fingerprints and looking at tiny clues, we need to get a feel for the whole environment. What's the big picture trend for new stock? And the report's top-line conclusion is pretty clear. The stock is in a stable uptrend. So the general direction is up, which is great, but that word stable, that's the key. It suggests a nice, steady climb, not some chaotic vertical explosion. And that kind of hints that there are other forces at play, keeping things from getting too crazy. So the report uses a few key characteristics to really define this stability. First, moderate volatility, so no wild, unpredictable swings. The stock's beta, which is just a measure of its volatility compared to the whole market, is under 1, which confirms it's a relatively calm ride. And that risk-reward ratio, sitting around 1.12, points to a pretty balanced profile. It all paints this picture of a steady ship sailing on some pretty friendly seas. All right, now we get to the real juicy part of the investigation. We're going from the big picture to the forensic details. The report looks at dozens of these technical indicators, and just like in any good detective story, the clues, well, they don't all point in the same direction. And this slide just perfectly lays out the tension in the data. On the bullish side, the good news, we've got above-average trading volume that shows a ton of interest from the market. But then you look at the other side, the cautionary clues. For instance, the Chaikin oscillator, which basically tracks money flowing in or out of a stock, it's negative. That suggests some selling pressure. The MACD, a really key momentum indicator, is showing something called bearish divergence, which is a classic potential sign of a slowdown. And then the stochastic signals are waving a little flag, warning the stock might be overbought and due for a little pullback. So what we've got here is a textbook case of conflicting evidence. Now, when your clues are this mixed up, you can't just point your finger at one suspect. A good analyst, just like a good detective, lays out the most likely scenarios based on all the evidence. And that's exactly what the report does, giving us 3 possible futures for where new stock might go. So let's start with the sunny side, the optimistic. This is the one where the bulls really take control, and that amazing earnings news sends the stock on a major rally. So what would actually need to happen for this future to play out? Well, the report gives us some very specific triggers to watch for. If we see a huge surge in trading volume, that's a sign of growing conviction. If the relative strength index, the RSI, which measures the speed and change of price moves, climbs up past 55, that signals momentum is really building. And the big one, if the stock price can punch through that first resistance level at $16.28, well, it could be cleared for takeoff. Okay, but what if those cautionary clues we saw? What if they're the ones telling the real story? That brings us to door number 2, the bearish scenario. This is where the market basically says, great news, but we're more focused on the technical risks. So here, the warning signs would be a negative signal from that MACD histogram we mentioned. And the key level everyone would be watching is that first support line at $15.34. If the price breaks below that, it would be a major sign of weakness, suggesting that sellers are taking control, no matter how fantastic the earnings report was. And then we have the third path. It's not up, it's not down, it's sideways. This is the scenario where the market just kind of takes a breath to digest all this big news. The triggers for this are all signs of indecision, really. Trading volume would just stay kind of average, none of that big surge we'd see in the bullish case. And the price would just chop back and forth, hovering around that central pivot point of $15.80. This is just the market's way of saying, hey, the news was great, but we're going to wait and see before we make our next big move. It's a phase called consolidation.
So, we've reviewed the scene of the crime, we've analyzed the big picture, and we've weighed all those conflicting clues. We have our 3 possible scenarios. Now it is time to bring it all home. What is the final conclusion of this whole technical report? This one quote from the report's conclusion just perfectly captures the whole situation. It acknowledges that, yeah, short-term momentum is kind of neutral, but it has this strong supportive backdrop from the earnings. But then it immediately throws in that warning about the overbought indicators and the risk of a pullback. The advice it's giving? Cautious optimism. And here you can see it, pulled directly from the report's conclusion. It's all right there in black and white, that careful balance between the good stuff like moving averages and earnings and the risks of a pullback. This is not a simple buy or sell call. It's a really sophisticated take on a complex situation. But you know what? The report does boil all of this complexity down into one single number, a final technical score to kind of quantify everything it found. And that score is 62.5.
So what does a 6250 actually mean? It translates to a moderately bullish signal. After weighing all the evidence, the good clues, the bullish ones, they just slightly outweigh the cautionary ones. So it's not a screaming bet the farm buy signal, but it suggests that, on balance, the outlook is favorable. The case is solved, and the verdict is in, cautiously optimistic.
And that leaves us with one final lingering question. The data gives us this really clear but also very nuanced verdict. It suggests the positive fundamentals are the real deal, but the technicals are advising against, recklessly chasing the stock. So for investors and traders watching NU, the mystery might be solved for today, but the story is far from over. Is the market just consolidating before its next leg up, or is it waiting for another piece of evidence before it really commits? Only time is going to tell.